What is going on, traders? Welcome back to the Traveling Trader. Happy Monday to you. Looking at the cryptocurrency market cap real quick, we did fall below $300 billion. We're now at 285.7. This happened over the weekend. There was definitely a pretty big correction, especially if you look at some coins like Litecoin or Bitcoin Cash, etc. But even Binance Coin dropped all the way down to around $27, I think. But we'll get into it and look at some of these charts individually. However, I'm not all too worried about it because, we were able to identify key levels of support and react accordingly. Obviously, all this was sent out on the Discord. If you want access to the trade alerts, link is in the description, and I'll show you what I mean in a second. We even had a leveraged play on Bitcoin once it hit a key support level before 10,000. It looks like Bitcoin is recovering a bit now. We are above 10,500, forming this symmetrical wedge or symmetrical triangle. Obviously, we have the lower highs and the higher lows, and it looks like they are converging now, or about to converge. Obviously in a few days we have a ways to go if it stays within this pattern. But the key thing to understand with this pattern, this is a continuation pattern, right? So Bitcoin obviously was in a pretty long uptrend for most of 2019, and we are now in this continuation pattern where the bulls and bears are fighting it out, but they're kind of exhausted, and you can tell from the volume levels as well, right? Volume is pretty stagnant. There isn't, any single day where volume is just astronomical in either direction. You had, a hefty number of buys on June 26th and a hefty number of sells on June 27th. This is when we hit the 13.8, 13.9 levels. However, we're still within this pattern, and the continuation pattern is not a bad sign. We had a continuation pattern here on this uptrend. We had one back here in April on this uptrend. So while you're in it, it does seem like the end of the world when Bitcoin, crashes 30% like it did between June 26th and July 2nd. We crashed 30%. Over the course of last week, we crashed another 25% before now recovering. But again, we are within this identifiable pattern, and because Bitcoin is actually moving in a measured way. I know it seems volatile to talk about something rising and falling 30% every few weeks, but it is it's acting in a pretty measured way with regards to its price discovery, right? So it was finding support at the 21 EMA, which is this white line here, all throughout 2019. And once it fell below that, right, the bulls got exhausted of upholding it past that point. It quickly found support at the 50-day MA. This is what you want to see. Obviously, the market can crash and it can bust through all identifiable levels on the way down, but that is not what happened. So to me, this says that Bitcoin is still acting in a very measured way, in the same way that we had this continuation pattern back here in May, in the same way that we had the continuation pattern back here in April. And even on the RSI, it's finding support at a key level that it has found support at for most of 2019, right? So if you follow the trade alerts on the Discord, I was saying that 9,800, which is around the 50 MA, is a level that I would consider buying. And for those that want to engage in a more risky trade, you could engage in a leveraged position on something like BitMEX. This is BitMEX's chart here. It's not too different from the regular BTC chart, but I'm just going to pull it up for accuracy's sake. So longing on something like BitMEX or Bitfinex, whatever exchange you use, you can use leverage and increase your profits. So this candle currently is showing a little above a 3% gain, a 3.3% gain. So if you were on 5x leverage, that's a 15% return. If you're on 10x leverage, that's a 30% return. And it's all based on the assumption that Bitcoin is acting in a measured way and will look to find support at key levels on the way down, and it won't just abruptly and belligerently start crashing through support levels for no reason. And I still think that Bitcoin is in a bullish uptrend. Actually, that's the facts say that. It's not really an opinion. It is still in an uptrend, and continuation patterns along the way aren't really anything that, to something that you should stress out over. Now, there's obviously a number of ways you can play this. You can dollar cost average within this wedge here, or within the symmetrical triangle, so that you can get the best entry price. If you are more of a swing trader, you can set tight stop limits or trailing stop limits and take profit and then buy back on the way down at identifiable levels. There isn't a right or wrong as long as you know why you are doing what you are doing. So let us take a look at Bitcoin on a longer time frame. Looking at the week, if you've been with me for a while, you know what I'm trying to point out here with this pattern. Obviously, you have the rounding bottom here, formed over a very long time, over 1 year now, right? And it's not a perfect rounding bottom, but that is the general shape of the pattern here. You have this rounding bottom, and I said, if you can go back weeks and weeks of videos that I've done on Bitcoin, that we would find resistance at this level here, only because it is an identifiable resistance point. Now, this isn't magic. There's a reason that these technical levels exist, and it's because what you're actually seeing on a chart are the collection of, or is the collection of, market psychology from individual traders to institutional traders, etc. And so this is where you would generally find resistance based on how tough this resistance was, back in January. We spent 7 weeks trying to break through this resistance and weren't able to. So, it's not out of the realm of possibility that we would find resistance at the same level again, just because of how stubborn it was before. And this was coming from, a crash from the all-time high. We tried to break above that again to uphold this uptrend and weren't able to. Now, on the flip side, we are now rallying down from being down $3,100 back here in December, and we are now finding resistance on the way up, which is fine. We could spend 3, 4, 5 more weeks here, who knows? I mean, stubborn levels of resistance, this is the way that they behave. Now, we've wicked over this resistance level, which is at around 11.8. We've wicked over it the last 3 weeks, actually, just weren't able to close above it, and we will try for it again this week and see what happens. Looking at the monthly on Bitcoin, here's where you really get to place things in perspective. So this is the monthly on Bitstamps chart going all the way back to 2011. This white line here is the 21-month EMA. This is what initially, this is one of the patterns, or one of the indicators that initially signified that we were in a bull rallies, when we eventually got above the 21-month EMA again after being below it for 5 or 6 months. Kind of in the same way that we see back here in 2015. Now, on the monthly chart, essentially you can go this is a scary thought for some, but essentially you can go all the way down to $7,000 and still $7,000 and still maintain above this 21-month EMA. Now, I'm not saying that will happen. I personally don't think that we're going to get to $7,000, only because of what's going on the weekly and as well on the daily. Major patterns would have to be broken down for that to be the case, right? A lot of things would have to be denied and not confirmed in a very improbable fashion for that to be the case. But it just to get a high level perspective, we can essentially drop down to 7,000 and still be above this 21-month EMA. A couple of swing trades that we were looking at, Litecoin saw almost a 42% drop from the highs that we saw back in June. This is a healthy correction. Obviously, this is what you want to see when something has been propped up for so long. Obviously, Litecoin has been rallying a lot more than most coins on the cryptocurrency charts, definitely Bitcoin, and definitely more than any of the top coins, really. And Litecoin's rally started all the way back in December. We saw it 7x from $20 to around $140, and now we are just cooling off. We haven't been oversold on the RSI since November, and we are getting to that point again. These are the type of rallies that are healthy. Again, with these identifiable levels, you would have already taken profit, and we're looking at buybacks. I did buy back and I sent out alerts for this. Again, if you want access to the trade alerts, the link is in the description. But I bought back at the 0.382 fib level, which was at around $98, and at the 0.5 fib level, which was around $85. And we are now bouncing off of this level back up above $91 already. Now, what I would like to see with this next move, obviously, is more volume coming in. And I do want to see this on balance volume start to curl back upwards to the levels that we saw back in June once again, in order for this rally to maintain. Now, the Litecoin halving is coming up in August. It'll be interesting to see what Litecoin does there. I personally don't think that there is enough data to say conclusively what will happen. My 2019 target for Litecoin was $175, and based on the pattern that it's in, I think we could get there. But obviously, if you're paying attention to these levels and you have your stop limit set out correctly, then there isn't really anything to worry about. I mean, Litecoin can come down crashing, and it's not like I'm going to be holding Litecoin stubbornly and just see my portfolio bleed. I will obviously have exited the market at that point, and I will thank Litecoin for its service, because it has been our best performing coin of 2019 so far. Link, I'm looking to buy back on Link. You see this 40% drop each time on Link, forming this descending wedge after a rally, and this time is no different. This is a 40% drop on Link, waiting for it to break out of this and at least reach back to the all-time highs at around 39,700 sats again. Looking at the traditional markets, we've been pretty successful on the traditional markets. And if you're part of the diamond traders and above, you get access to the trade alerts that are applicable to stocks as well. The Dow, the S&P, the NASDAQ, it really pretty much unchanged this morning. I think the market is waiting for two major events. One, the trade talks with China, and two, the Fed announcement that's coming at the end of the month. And there's a potential Fed rate cut, which is favorable to businesses, which would then again boost the markets ostensibly. So that is what the market is waiting for currently. Symantec, we finally saw, look at this huge, this is crypto style wicks here in the after hours market. We saw Symantec drop to $18, and we are now back at 22. My stop limit exited for profit finally. We had a good run on Symantec, gaining about 32% profit. But the reason that it fell today is because it came out that the talks with Broadcom fell through, and Broadcom was no longer looking at acquiring Symantec, which was a possibility. Microsoft holding a pretty big bag of Microsoft, all-time highs, still sitting at all-time highs. Same as Disney, still sitting at all-time highs. And the SPY, which is the ETF that follows the S&P 500, is finally back over $300 again. This is what I was projecting based off of my analysis of the S&P 500. And hopefully, if the Fed does cut the rates at the end of the month, we will see a major propelling of this market, especially now that we are at all-time highs and we are above that psychological $300 level. Anyway, that is it for this video. If you got anything out of this video, hit that thumbs up. If you have a question or a comment or an agreement, disagreement, leave that in the comment section below. Get active in the comments. If you want access to the trade alerts, again, link is in the description. I have 2 more spots left for one-on-one technical analysis training for this month, and that same link is in the description if you want to sign up. Only 2 spots left. Subscribe to the channel if you haven't done so already. Stay safe out there, traders. Peace.